There we go. They asked me to talk about tax and small business this morning. And for the last 2 weeks, I've been charging around South Africa talking about the national budget speech and what does it mean. And there have been some negative things said about this year's stuff in the press, such as, they say, the national budget speech this year did nothing for small business. It wasn't even mentioned. There were a whole lot of other things. And yeah, it didn't do anything for huge about it. There wasn't a major development. But that doesn't mean that there isn't an overall package there. And the question is, you've got to go out and look for it. But please, lesson number one in small business is that what we see is it's far more than just the tax. It's more than just making profit. It's about providing employment. It's about paying VAT and a whole lot of other things. So if you say, well, I'm paying too much tax, that's a nice problem to have, isn't it? And we've got to say, well, how much tax are you paying? And in fact, you will see that there's a lot that you can do about it. Let's go back 100 years to the start of an adventure that has got a lot bigger, the start of the ANC. And when we look at the start of the ANC, 100 years ago this year, we say, how many South Africans were there then? And on the right of the picture there, you see Sol Plaatje. He was in Mafeking during the Boer War, when there were only 1 million South Africans. And the first thing what we've got to have a look at is when you're establishing a business in South Africa, what's your country look like? And Zapiro draws pictures of it and says, well, you know, there's lots of dependents, and we all make jokes about the president and all the rest of it. That's not the big issue. The big issue is that last year we went over the 50 million mark in South Africans. And here's a pie diagram of what they look like. They are 1.4 million disabled, 3% of the population. Then there are 2 million AIDS orphans. Then there are 10 million plus on child grants. Then you have 8 million children who are not on child grants. There are more children on child grants in South Africa than there are not. Then you have 2.2 million plus old age pensioners who we have nothing else than 1,200 rands per month in a pension. Then you have one of the biggest problems in South Africa, 4 million unemployed and growing. And even more frightening than that, 10 million economically inactive. A lot of those are people who were the unemployed, but have now given up and haven't even looked for work for in the last 30 days. And that is the biggest problem that we are seeking to fix in South Africa today. Then we say, how many people pay tax? And we say, yes, there are 9 million people employed. Sorry, there are 13 million employed, but 9 million of them are below tax threshold. So when one looks at how many people actually are taxpayers, it's about 3.3 to 4 million, depending which way we measure it. There are 3.3 in the range under 500,000. And when you look in South Africa and you say, well, how many fat cats are there? There are only 150,000 in super tax. And this is one of the problems. We're trying to feed all of these people off a minute tax base. And that's one of the things that's so important in the SMEs, is that the SMEs are growing taxpayers. And we want to create an environment which helps them. So in a general perspective, when you talk about a budget, you are saying, in the national context, there are 50 million people. And the priorities of a national budget are, number one, we have to contain the deficit. Because if we don't contain the deficit, the international rating agencies are going to take us out, push up interest rates, and there'll be economic turmoil. Next is look after the elderly and the children. Then we have to do something for 15 million people who need economic security in the form of a job or a career. And then you have to keep the unions happy. Because every bright idea that you come up with, you've got to get it past the unions before it's a bright idea. Otherwise, it's just a textbook idea, okay? And a lot of the suggestions that we've got from the national budget are textbook ideas because they would never be acceptable by the unions. Somebody said to me the other day, why don't we just get rid of all the teachers and privatize education? I said, because you've got 320,000 teachers in a union. That's why not. Okay? Then you've got to build infrastructure. More and more of it. It's expensive. Then only do you get to taxpayers. And you've got to give a better deal first to the 10 million who have got a job, and we want them to pay as little tax as possible. And then only do you get to 2 million people who actually make money. So you've got to look at, first of all, where are you in the pecking order? Now, when we look at South Africa's tax today, who pays it? And what is the challenge? The challenge that we've got is that we are paying too much personal tax. Over the last few years, the personal taxpayer has picked up 34% of the tax liability in South Africa by way of the individual's tax alone. Very expensive. And here's some good news for small business. Great tax principle. The worst tax planning position that you can have is to have a job, because then you earn it and you pay tax on it. No deductions, etc. SMEs do a lot better off than that. It's a far better tax profile. A lot of people say to me, gee, Matthew, the best thing that ever happened to me about making an SME is that I have so much of a better tax profile than when I was employed. What we see on corporate is for the last few years they've been smiling because they've been given a better and better deal over many years. What you see in this year's budget is that Prof Gordon is saying, gee, the corporates need to pay a little bit more. It's going a little bit far. Because your consumer in your VAT collections is under pressure. VAT collections are down. Why? Consumers are not going to the mall. And that is of concern to everybody, because it affects not only tax collections, it affects SMEs, it affects everybody. So the game plan going forward to this year, from the budget, and it's a pity that the minister can't present this with these figures when he goes to Parliament. His game plan is to say, business must pay more this year. Hopefully through economic growth. I'm not putting up their tax rate. But then there was this business of the conversion from secondary tax on companies to dividends, and that was going to cost South Africa 8 billion rand. We had to do it for the international investor, so they put up dividend tax rates to 15%. Overall, they get 1 billion rand extra from it, out of 1 trillion rands of tax collections. So it's a minor change in the actual amount. But then you've got to look, and you've got to say, right, now where's the big money coming from? And what you've got to see is that half of the increases in tax this year will come from where our consumers spend their money. Fuel, sin tax, electricity, VAT. That's all a tax on the consumer. And that's why government needs SMEs to go out there and sell things. And every time you sell things, you pay more tax. People say to me, why? How can I pay less tax? I say, stop going to the mall. And they say, be serious. And I said, well, that's where half your tax increases are coming from this year. Thank you very much. And then they're going to go back to the individual still and nail them. And most of that is going to come from employed people. So if you look at the importance of SMEs in this, every time we provide a job, we create a taxpayer. And by the end of the year, by the time you've employed a whole lot of people, your contribution through your employees' tax checks is far greater than your contribution, your own personal contribution. So if you want to put it very bluntly, SMEs are paying to fill potholes, provide pensions, provide education systems, and everything else. That's why they are so critical in the general scheme of things. Now you come to who pays the tax in South Africa. And we say the biggest taxpayers of all, group of taxpayers, are the individual. And this year, SARS said there are 4 million of them out of 50 million. But then, the first 19%, say 800,000, are below the tax threshold of 60,000. So that makes it about 3.2 million, actually. And then, the next million are in the category 60,000 to 120,000, and they only pay 4% of the tax, because we've got to give them a better deal. That's the lower-end consumer. We're trying to give them as much of a break as possible. So that leaves 2 million people out of 50 million people to pay the bulk of the tax. And 48% of the total taxpayers are in the category 120,000 a year to 400,000 a year. And they're paying 42% of the tax. And then we come to the fat cats. And if you measure a fat cat as being earning over 400,000 rands a year, there are only 378,000 of them in the entire country. And they pay 54% of individuals' tax alone. It's a rare breed to have a wealthy person in South Africa. And what we've got to do is create as many people as we can who are earning in the category 60,000 to 400,000. Because we need more taxpayers, not higher tax rates. Archbishop Emeritus Desmond Tutu says, tax the wealthy more. Well, he's talking about taxing 378,000 people out of 50 million. It doesn't work mathematically to do that. It just shows how desperate it is. But this year we have seen that the company tax collections are lagging further and further behind individuals' tax. And Prof Matthew's looking at this, and he's saying back in 2006, company tax collections were nearly the same as individuals. Today, it's lagged back that they're paying 50% less. And he's saying we have to do something about that. We have to give a better deal to the individual taxpayer. So, we have to look at that and say, how does it fit in? And here is a basic lesson about tax and SMEs. Number one, what type of vehicle do you trade in? I'm not talking about a Toyota or a Fortuner. I'm talking about whether it's a trust, a company, or individual. So you can be a sole proprietor or a partnership. They're treated the same for tax. Or you can be a trust, if you want to be clever. Or you can be a company which has a bigger social standing. We have to dissect that a little bit. And we say, when you come to an individual or a sole trader, I like it. Because these forms of trading are simple. You just go out there. You don't have to have permission to start trading. You just get up and walk. Okay? And then the advantage is it's dead simple. I can go out on a street corner today and start trading. There are no formalities. I don't have to fill in a form for 21 days. Okay? Then I've got full control of what I'm doing. It's all in my pocket. I've got no separate finances, no complications, and there are certain tax advantages which I'm going to show to you in a moment. And you know, there's a thing with it sometimes that I say to SMEs, get up and trade. And when you start feeling like your pockets are getting full of cash, then go and find somebody to help you. And I'll show you how to do that in a moment. Don't let the tax tail wag the dog. It's terribly important in tax. But there are disadvantages when you are a sole trader. Risk. What happens if it all goes wrong? Then you go insolvent in your own personal capacity. But that's not the risk it used to be. We have now business rescue procedures and everything else in South Africa, which are making your life a bit better. If you die or retire, there's no continuity. And sometimes when one looks for capital, they say, we don't deal with individuals, we only deal with companies. And when you get to earning too much money, there are certain tax disadvantages. So, on partnerships, I don't particularly like them, but they are simple. You share out profits between the partners, and maybe there's greater access to funds, and still you are taxed as an individual, but not as a partnership. The disadvantage of a partnership, please, is when you are responsible for the acts of your fellow partners. And if one of your partners goes insolvent and drives the whole thing into liquidation, well, then you could be liable along with them jointly and severally. And again, continuity problems may be a problem because the partnership ends if somebody withdraws or goes insolvent. And it may not be that tax efficient. You know, I say there's time for one partnership in your life, and that's when you get married, okay? Not necessarily bringing that into your business adventures. So partnerships and individuals are taxed the same. And then we get to these tax tables, and people look at them and they say, what's going on here? And on budget day, they're always telling us that they're giving more money back to the individual. That's just inflationary adjustment. I've showed you already the individual will pay a lot more tax this year. That's not what it's about. But there are wonderful things in a tax table. This is what you can tell them about. This year, they extended the basic threshold, lowest threshold, to 160,000 at 18%. Then they widened the middle, and you will only pay tax at 607, super tax at 40% once you reach the 617,000 Rand level. And there are not many of those. There are only about 150,000 who ever get there. Now, what that tells you is that at the lower level of the tax table, you are protected. So, they then give you a tax rebate or discount on your final tax liability, which means that every South African can earn 63,000 rands a year without paying tax. And that's one of the reasons when you start a business, it's not the biggest issue in the world, because you can earn the first 63,000 before you even start making a problem. And what we see with this, then we add in some better rates for pensioners. I don't want to go there now. But what you see with this in the tax tables is that we have a generous tax package for the individual taxpayer in South Africa up to 250,000 rands a year. The tax rate after rebates there, the average tax rate is very generous. So you don't have to be clever. You're not going to be hurt if you are making yourself 10,000 rands a month in a small business. Only once you go above 250 do you say, yellow light on, I'm starting to run into higher tax rates. And once you go over 484,000, then it really does start to hurt. That's when you say, ring a bell, find a tax nerd. Okay, I need some help. And what people are doing is that they are forming business entities too early on when they could be doing it just simply. So when one says they did nothing to help micro-business, well, we say micro-business are in the bottom level of the tax bracket, and they've been helped anyway. They've got a generous tax package at the lower end of the scale. And that's shown in the numbers where 25% of the taxpayers are paying 4% of the tax, isn't it? And you've got nothing to worry about if you're below 63,000. There's always a clever person who wants to form a trust. They just love them. It's like got a social standing. I don't know why. But please, this is a complicated business structure. They are normally put together for high net worth individuals. You've got to understand a trust deed. It's normally put there to try and stave on estate planning, so you won't pay taxes when you die. Well, that's a lot of help when you're still trying to live today, okay? It protects your assets in the event of insolvency while still giving you some control, and it may be tax efficient. But there are disadvantages. It's expensive. Trustees are liable for their acts. There are things like fiduciary responsibilities, which are very complicated, and there is a flat rate on tax. So people who come up to me today and say, I've got a trust, I say, well, hang on, you're quite a generous person, because you are volunteering to pay tax at a flat rate of 40%, when if you did it in your own name, you'd only pay 40% tax rate when you get to a tax level of above 617,000. So do you want to pay to fix potholes? And they say, no. And I say, but there's more. That 40% applies on revenue income, and in this year's budget, they've increased your capital gains tax rates for when you sell your business, and that's now gone up to a flat rate of 26.7% in a trust when you could be paying maximum 13%. That's double. So generally, I say, watch out for trusts and trading. There are better ways to do it. Yes, there are circumstances where you use it, but I generally say in the context of SMEs, you don't need them. So we come to the next one, which is a company. Individuals, great for when you're starting off. Now we look at a company. And we say sometimes we have to have companies. They're separate legal entities. There's limited liability if it goes insolvent. There's greater access to your capital because people want to deal with companies. It's got a good pedigree. There is continuity when you die because the company goes on and does not die with you. And there are flat and favorable tax rates as well. The disadvantages that come with it are the formalities. And this is where everybody complains. They say there are all of these forms I've got to fill in. And yes, we're trying to do what we can about simplifying that. But there's a price to having a company. You don't have to have one, but if you want to say I'm a business leader, you have got to get on top of your taxes. There are a lot of computer programs, etc. today to help you. It's getting there. Be patient, okay? You have to comply with the Companies Act, and the new Companies Act is quite complicated. There are regulations and monitoring and onerous responsibilities on directors. You can't just say, I'm a director, I'm just going to do my own thing. You've got to be a bit more careful with that. And there are certain tax pitfalls.